Hello, it's Mr. Intermarket Analysis bringing you the analysis of the FTSE 100 for it's 27th of November now. I think we are, yep, 27th of November now, 2013. Okay, that's Wednesday's trading. Okay, because it's almost 1 o'clock in the morning at the moment. Okay, I just got back from badminton, went out for a meal with a friend, and just got back now after doing some analysis, and I thought I'd post a video for Wednesday's trading. Okay, so interesting. Okay, so let's see what happened today. Okay, so basically we had Asia down overnight, which wasn't exactly down. We had China flat overnight, and we had the Nikkei down, although the Japanese yen was still quite buoyant. You've got the USD JPY and Euro JPY holding support all day. Okay, so although the Nikkei was down 100 points overnight, I expected the FTSE to remain strong, especially given the fact that we had Mr. Carney speaking in the morning, and he was very dovish. Okay, he certainly supported the market in the sense that he stated that he didn't anticipate any rises in interest rates thus at present. Okay, and even going forward, he was very dovish in the sense that he said that there's no trigger. The trigger can be altered, forward guidance can be altered, etc., etc. All his remarks, for my interpretation, based on my understanding of economics, given my economics degree, etc., was the fact that he was very bearish on the on sterling. Well, all his comments were definitely bearish. Okay, so he certainly said that he wasn't going to derail any potential recovery or any early stages of a recovery. That will be easy monetary policy. Okay, i.e. lower rates for the foreseeable future, until he got confirmation. He even downplayed the recent strength in the employment data. Okay, stating that it's just a one-off, and he needed to see further proof and further support and sustained rises in employment. So overall, it was very dovish and it's very supportive of the markets, because it means that he's going to be adopting an easy monetary stance going forward, and will maintain an easy monetary stance, and it's definitely bullish for the markets, well, especially for the FTSE. Okay, and also we had commodities higher overnight, so we had oil and gold, copper all up overnight, so that was bullish. Okay, so quite a strange one. We also had the Aussie all higher overnight as well, so that was bullish for the market. We had the Kiwi dollar higher overnight as well, which was relatively bullish for the market. So adding commodities and risk FX higher overnight, and the euro obviously has held well. Okay, as well. So certainly no argument there to sell the FTSE, which is quite strange. So only thing I can explain, especially from a fundamental perspective, is the fact that we had basically we've got light volume at the moment with regards to the US Thanksgiving this week. So the only thing I can explain is light volume. So with the Yanks not on board fully, so interesting. Okay, so let's have a look at the technical side now. Now that I've given you the fundamental side. Okay, so remember, commodities are all building a base. Risk FX is obviously building a base. Sterling relatively remains, well, given the fact that Carney was dovish, sterling certainly is bearish. I mean, I played a short on the sterling, managed about 35 points out on the short side. That was good. I did get stopped out on the FTSE long today, minus 40, and I'm still long on the FTSE from, I've got 6647 average at the moment, so I'm long the FTSE at the moment. Okay, going into tomorrow. So far this week, how many points have I made? I've made 140 points, I think, and 140 points and counting, given the fact that I've got a FTSE long active at the moment, which is currently minus 16 at the moment. Okay, and I'll see exactly how that plays out tomorrow, going into tomorrow. But yeah, so far so good. It's been a good week. Okay, it's been a good week. It's been tricky though, because the FTSE itself is diverging from its peers. We've got CAC, Euro stocks, and DAX relatively bullish. We've got Nasdaq making new highs. The S&P still remains aloft. You've got the Dow remaining aloft and high and lofty. You've got semiconductors, and you've got the Russell 2000 as well, pretty bullish. So strange. Okay, the FTSE seems to be going off on a tangent or path of its own. Okay, so let's try and break down and see exactly what's happening. Okay, so basically on this chart, like I stated, this trend line on the FTSE 250, this is, okay, would hold. It certainly has held, and we have broken out this bearish channel. So that's a relatively bullish signal. So once you break out this channel, I expect a short squeeze, and a short squeeze back high to the 1700 level, which in turn supports the argument for the FTSE to go higher. Yep, okay. So bear that in mind. So let's go to the FTSE 100 now, and let's see what the damage has been done today. There's quite a lot of technical damage done. So let's just have a look. Okay, so I mean that's a chart of the DAX. Okay, so this is a chart of the FTSE. Okay, so FTSE 100. Okay. So yeah, I had a potential inverted head and shoulders formation given the fact that we retraced a full red candle. Okay, almost 100%. We've consolidated, and now we are holding that red trend line there. Okay, so that red trend line certainly being obedient thus far. Okay, I did expect an inverted head and shoulders to play out, so obviously that's out of the equation now, given the fact that Nasdaq was making new highs, S&P making a high, DAX making new highs, and obviously the FTSE had to follow because it was lagging. Okay, so the FTSE weekly chart, let's just quickly look at the weekly chart. Weekly chart obviously is looking kind of bearish now. Okay, there's a lot of resistance there at the moment, but we'll see. Okay, given the fact that you got Kool-Aid, etc., that can certainly change the landscape. But for now, let's just ignore the IHS because that's no longer going to play out. All we can say is that we've got a bearish expanding wedge pattern. Okay, so and the support level on this wedge pattern at present you've got is the key level, which is around the 6630 level. Okay, so watch out for the 6630. That will be your interim and key support level. Okay, on the daily chart. Righty then. Okay, let's go to our smaller time frames. Let's see what we can decipher from there. Okay, dokie then. Okay, so yeah, we had a breakdown of the bearish channel. Okay, we retested that bearish channel support, which we've held. Okay, now obviously my concern is the fact that we've number one, we failed to create the inverted head and shoulders pattern higher, especially in the morning. Okay, we just failed to rally altogether. We did go as high as 6, 7, 10 in the morning. Yeah, it looks like we go as high as 6, 7, 10. And obviously then we reverse and followed, moved lower. Okay, which is a good sign. So basically that's something that we keep an eye out for. Okay. So yeah, on this occasion, inverted head and shoulders failed, small one. So there I can get rid of that now. So that's a fail pattern. Okay, right, and obviously the inverted head and shoulders pattern failed to hold a 75% right shoulder. That's one of the reasons why I took a long again around this region, expecting it to hold and obviously play out. That obviously didn't play out, so I can get rid of this now as well. Okay, we broke this contracting wedge pattern to the downside, then you had a bear flag continuation, which again, like I said, I didn't expect that to happen. I expected the market to move higher. Now we have the 75 fib retracement resistance or support, should I say. So we've got this horizontal level, 2 levels here, which is around the 6640 level. So given the fact that the market is traded as low as 6630, 6630 is your last key level. If you break 6630, then obviously we go down to double bottom, which is 6610. Again, I expect that very unlikely to happen. Obviously I've got a bias because I'm long the FTSE from the 6646 level average. Okay, and looking for a move higher, but it's very hard for me to envisage that happening, especially with regards to the European and US markets, etc. Pretty high. Okay. So let's go to a 10-minute chart. A 10-minute chart, obviously, like I explained, we've got a gap at 6630 and we had the gap at 6725. I expected the gap at 6725 to be closed first, given the fact that it's light volume, thanks giving holiday, etc. World markets are still buoyant, etc. And obviously the markets could continue to short squeeze higher. Obviously that's failed, which is quite a worrying sign really, but we'll see exactly what happens. I mean, even with the Carney dovish statement as well, the market's failed, to move from that perspective as well. So it's quite a strange day really, to be honest with you. With the FTSE itself, it certainly seems to be going off on a tangent by itself. Obviously we had this potential support level here. Now we just sort of draw a, looks like a falling contracting wedge, but we have broken out below that as well, which again, like I said, potential light volume phenomenon here. Okay, market exaggerating, etc, misinterpreting the talk of Mr. Carney. Obviously, like I said, there's a gap there. It's closed the gap, so maybe you just wanted to close the gap before it starts to propel higher. So that's something that we need to focus on. Okay, so that's something that I'll keep an eye out for tomorrow with regards to the market. Okay, so I'm actually shattered at the moment. Okay, so yeah, okay, so there we go. So we have a falling contracting wedge which really has been disobedient, so we get rid of that. Okay, and see if we can draw a potential pattern here. Okay, so we just sort of observe that for now. Okay, so this is your bearish channel. That's all we're going to be obedient to for now, unless anything changes. Okay, so obviously you've got the falling. You've got this channel here, lower channel support. So 6630 gap fill support at 6630 as well. Bear that in mind. Obviously, if you fail, the next level is at 6610. Again, very unlikely to see that unless Asian certain markets get butchered overnight and the yen gets butchered. Then obviously that certainly is a possibility. Okay, but for now, obviously keep an eye out for this pattern here. 6630 is support in the interim. If not, then 6610. If you move higher, then 6650 will be your initial resistance, and then we'll just have to see exactly how it plays out from there. Okay, folks, so certainly my perspective, definitely keeping a bullish bias on the markets and expecting this 75% fib support to hold, although we have breached it, so it's a concern. So the next level technically should be 6610. But given the fact the world markets are squeezing higher, and you've got risk FX, commods, and you've got your yen pairs getting hammered, and the Nikkei inflating higher, then obviously we could continue to move higher. So especially given the fact that we've got Christmas coming now, Christmas rally. Adding the fact that we've got light volume this week as well. Light volume generally favours the upside, so bear that in mind. Okay, folks. So risk on, risk off, wax on, wax off. Goodbye now.